a newcomer in the session today. He's been with us before, but he's rejoining now. He's not aware of the changes and the stuff that we did during his absence. So what I'm going to do is quickly, in 5 minutes, just give a brief introduction to the changes that we're doing in the process and how he can benefit and make good use of the planning session. And it also would be beneficial to you guys as a refresher to what we are doing. Okay, so we'll take about 5-10 minutes on that, and we'll go back to our stuff. Okay, so first of all, this is pretty much the, as you all know, the radar screen. And at the end of every session now, I mean, this is one of the things that we do, John. I send all of you a copy of this radar screen so that you can actually able to take those trades. So the first change that we did in the session is I pretty much do all the work and all the planning and putting the numbers, filling in the numbers over Saturday and Sunday before the session starts. And while I am doing that, I also put in my orders. As you can see here, there are several open orders. They're all good to cancel orders, and I put them in. So I am planning my trade over the weekend. I am putting my orders in, and I'm putting the open orders or the good to cancel orders in a small size. I am putting a mini. So for example, this is the I have no idea what the mini that is, but anyway, that's a mini. They have different symbols, so I put those mini orders in. Oh, this is Japanese yen, I think. And these are small minis or micros, and I place them all before the market opens at night. So what happens is once the market moves, I get filled. I am in the trade. I don't have to wait to be notified that the trigger has taken place. So I'm already in the trade with a small position. So even if it goes against me, it's pennies. It's nothing financially. And then when I am sitting at my desk and I'm doing my trading time, I begin to add to those positions. Okay, so that is the first change. The second change is, as you can see in the radar screen, there is the long point, which is the one above it we are going to regularly buy. And then we have the short point, which is the one below it, at it, or below it we're going to sell. And then we have the structural long point, which is a major entry point to the long side. And as you can see on the radar screen, it is followed by another structural long point, which is above it. So this one is 97.270. The one that's above it is 99.36. And then there is another one above it, which is 1.3085. And then there is a fourth one. So we layered 4 structural points above the entry, and we also have 4 structured points below the short entry. So if I open this, you can see that you got one long point, which is the same as the structure long point, then structure long point number 2, number 3, number 4, and then our short point, and then it's the same as the structure short point, and then the 4. What you should do is, once I am done with the session, I will send you an image of this screen, of the radar screen. Once you get this image, so for example, you want to, first, rule number 1, you do not choose which one you're going to trade. There is no preferential treatment because we don't know which is the one that's going to pay. Okay, so we need to take it as is. So for example, if you look at this radar screen, this is the radar screen that you see here. This is from last week. So for example, a weird one, which is the Aussie New Zealand. The Aussie New Zealand. As you can see, the long point, we were buying it at 1.035. It is now, at the close of Friday, 1.06. So you got 300 pips on that. If you enter with a mini and then raise it to a full position, that's a $3,000 move on that position. If you look at the Aussie Swiss, we are, this I'll leave that for now. If you look at the pound yen, the pound yen, the buy, we were going to buy it at 133.48. This was the plan from last week, that we're going to buy it at 133.48. As you can see, it went up to the second structural point. I'm sorry, that's the first structure point. So the long point is the same as the structure point, which is 133. Then the pound yen flew. It went all the way up to 140.012. These are all last week numbers. Everybody has a copy of this radar screen that attended last week. So now from 133.50, let's say, to 140.12, that's 650 pips. So between the Aussie New Zealand and the pound yen, you have 1,000 pips. And these are actual trades. These are not hypotheticals. And I have done this process so that this is how I do to make the money or my money. And the same way I want you to follow the modus operandi so that you can get the same benefit. Now, as you can see, this is the pound yen. Now, you will see that the pound yen, the 140.012, has a red color. This software is available. This is the new upgrade, the version, let's call it 2.0, that we are using today. You don't need to have it, but if you want to purchase that upgrade, you're welcome to, if you have the old version. But if you don't need to, it's not, if you're able to handle it manually, all the power to you. I'm doing the work. And so anyway, if you look at the 140.12, If we go to the pound yen chart, the buying point was 133.48. So this was the buying point at the low of this yellow candle, and the target, if you will, was the 140.06. So this move is about 650 pips. As you can see, it went all the way up to 143. So it passed the target by 300 pips. So this move is about 1,000 pips. 1,000 pips. Let me show you. It's 968 pips. This move. As you can see, it's a 7.24% move. So you have 968 plus the New Zealand. So you can imagine, the next trade, you usually put your stop below structure point number 2. So you buy it here, it gets to structure point the number 2, and if it goes above it, it's okay. You put your stop below the structure point number 2. You put it here. That's your stop. And this stop is stop and reverse. So what you do is, if it comes back below on Friday, below the 140 spot 1-2, you close the trade, you take your profits, and then you can go short, because that is now a failure. And so you would see that in those two trades, you could have made easily an average of 600-700 pips. I mean, nobody takes exactly the whole move. Okay? Now, if you look, I'll take you back to the radar screen for one more point. You can see the same thing with the I want to show you a couple of very nice trades from last week. Look at the Aussie yen, 77.57. Now it's 79.33. And it actually went all the way to 80 spot 66. So from 77.50 to 80.55, that's another 300 pips, and you would be short at 80 spot 66, and now it is 73.3, so you have another 100 pips on the short side. Now, the guys that already have the software and stuff like that can understand the benefit, because right when I'm trading all day, I am looking at this radar screen because I did all the work. And when something changes color, I have to look at it. Now it's not white, it's just, it became red. So now it's failing. So now it's time for me to exit, and I can decide if I want to take it short or not. If you look at the rest of them, they're pretty much the same principle. If, for example, take the dollar max, let's take the dollar. Anyway, I don't want to spend too much time on it, but this is the radar screen. This is last week's radar screen. This now is this week's. This is the new one, which I am going to send to you now. And as you can see, the buying the pound yen has now become 140 spot 12. This is the entry point. So we're going to take it. The next target above that is the 146. If it goes above the 146.74, it has to stay above that. You can create a spreadsheet if you want. Make sure that the numbers are in. If you have a platform, an MT4 platform, make sure that you have price alerts. Again, you have to do what you need to do to take the second and third trade. But at least right now you want to put an order to buy the pound yen at 140 spot 12. And I'm sorry, I made a mistake. The short in the pound yen is, I mean, I've been working till 4 o'clock this morning. So this is the short at 137. This is where we're going to take it short. Also, I want to show you the New Zealand yen. If you remember from the weeks last week, I mean, the most important number in the New Zealand yen was the 75.09. So we bought it at 73. It went above the 75.09, and then it failed to stay above it, and it started coming down. So at least you had a couple of 100 pips. So the yen pairs paid handsomely, really paid well last week. The dollar yen, all the yen paid well, plus the euro pairs and the rest of it. So to summarize, you will get the new radar screen as soon as I'm done in the next half an hour. And what you need to do, you put a buy order, a good to cancel buy order at or above that price, and you put a sell, good to cancel sell order below the sell point. You can also put another buy above the structure if you wish. Again, it's totally up to you, but at least start by putting a buy and a sell above and below the entry points, the long and the short. Okay? And then once you're filled, you begin to manage your trade. That is the summary of the methodology and how we use the radar screen and how for you to implement this and to benefit from it. Okay, now let us go to our I just want to show you a couple of indicators, or not indicators, a couple of charts, and we want to see what's going to happen next week. Pretty much next week there isn't much to do really, except on next Thursday, which is the ECB meeting on Thursday, and they will start trying to make a decision about supposedly the ECB, and then we are going to have Draghi do a press conference. Okay, so going through this week, Monday there isn't much about to do in anything, and Japan is closed. Uh, the minutes of the Australian numbers, again, the market has moved because the Australians is not cutting yet the interest rate, so I don't see anything. The German economic sentiment, all these regular stuff, people have to take them right now with a very big grain of salt, simply because of the Brit exit, the coup d'etat that took place in Turkey and it failed. The whole world is really on a powder keg, and people now just react before they think, and then so anyway, I don't see that any of these is going to be something that will change the perception of the euro or the pound or whatever. The one important number on Tuesday is in New Zealand, which is the global dairy trade prices, and of course if this goes up, then New Zealand goes up. If it comes down, then New Zealand comes down. There has been rumors that China was planning to dump dairy stuff, which she doesn't have. I mean, it's the biggest importer of dairy from New Zealand, but they were making threats to New Zealand, maybe the price is too high, whatever, but there is some rambling. But if, in general, if the price of the global dairy price is high, then the the New Zealand is going to go up. We have the claimant in the UK on Wednesday. This is interesting. I don't see any immediate reaction to the Brit exit vote this week or this month. I mean, I don't see people are leaving the country right now yet. I mean, everybody's still waiting because they did not trigger the Article 50, so pretty much so far it is kind of the status quo. So, I mean, people are not really in a rush to leave, so I think things are kind of the same. But the question that we have to give it some thought, and I'm still trying to weigh the variables in my head. Now, if they trigger the 50 and they restrict the movement, now what is going to happen to the people that are working in the UK? Are they going to move? And if they're going to move, will their jobs be filled by UK residents? Uh, I don't really have yet enough information to make an educated guess, but what I heard from the UK is that they have been talking with Canada. The UK has been talking with Canada, and Canada is trying to expedite a fast track trading agreement, and with the UK, the United States is also cooperating, and I kind of believe that the United Kingdom will get, because of its importance, because of its value as a nation and its presence in the global economy. I'm sure whatever agreement that has been signed with the UK, with the European Union. So if Canada has a treaty with the European Union, I don't find it difficult that a carbon copy of that treaty between the US and Europe to be the same between US and Canada, US and England, unless there are specific items that require to be addressed. I don't know, but I find it I'm sure it's going to be pretty much the same because there is no, but anyway, so the claimant I pretty much should be the same, and even if it did happen, I mean, I don't see that going to push the market. Only if it's high, then it's going to press the pound lower. Then you have the retail sales on Thursday in the UK. And then, of course, Thursday, our dear friend Draghi is going to speak, and he's going to be the mover. There are statements, of course, that he says that he's going to do everything in his power, and he's going to do buying corporate bonds now. Now they buy corporate bonds. They're buying Volkswagen. They're buying Siemens. They're buying these bonds, and of course, this is to push liquidity in the market. And of course, he can cut interest rates if he wants to, in addition to doing whatever that needs to be done. So pretty much we can summarize in anticipation what he's going to say on Thursday, which is he's going to do whatever that needs to be done. He's going to say that. But I don't think he's going to make any different announcement in the type of bonds that he's buying, because he's still buying corporate bonds and he hasn't bought enough, but he's buying a tranche of 60 billion, I think, or 80 billion euros a month. The other thing, as we discussed, he can do is cutting interest rates. Now, the interest rate pretty much is close to zero, and I don't think it is wise. I mean, as you can see here, it's zero. I don't think it's wise for Draghi to actually go into the markets right now and cut and go into negative interest rate until the Brit exits. So he needs, when the Brit exit happens, he needs to have a weapon in his hand. So if he fires that bullet by going into negative interest rate, if the Brit exit happens, he has nothing. I mean, he really doesn't have any weapons in his arsenal to use if and when the Brit exit takes place, which is probably going to take place. The same reasoning behind this point is what Carney did last month. He did not cut the interest rate, even though it is safe money, to make a safe bet that within the next, I would say, 60 days, the Bank of England is going to cut the UK interest rate, and it's going to push down. But by not cutting it right after the election, at least it calmed the market, and it's a common sense thing. I mean, we always have to think about it after the fact, but if you think about it before it happened, it's a common sense move. I mean, anybody in his position wouldn't have cut the interest rate there, because cutting the interest rate then and there, right after the Brit exit, would have terrorized the market. So by the same token, I don't expect Draghi to do anything. Okay? And then pretty much till the end of the week. So it's going to be a regular, in a way, kind of a trading week. So this is as far as the news goes. Now, coming to the charts, as you can see, the dollar, we're going to go to my charts in a minute, but I want you to see that the dollar is kind of moving in a sideways pattern. moving in a sideways pattern, and in a way kind of pushing slightly higher. So that sideways to a positive manner. The euro is weakening. The Canadian started to weaken on Friday. The Aussie also started to weaken on Friday, and the New Zealand, this one capitulated right after the Chinese last week started rambling about the dairy prices. And of course, here is the pound. As we can see, I'm going to show you the charts in a minute. So, in essence, by looking at this, you can get the sense that the dollar is pretty much in a sideways move. Pretty much in a sideways move, going nowhere in a hurry. But the rest of the world currencies, I mean, the strength in the dollar is actually that the dollar didn't do anything. It's at or about the 96. The range of all of last week is about 72 pips, from 96 to 96.72. That's the whole range of last week, 72 pips. But the moves that happened last week was actually in all the other currencies. The yen came down, the pound in a way, the euro, the CAD, the Aussie, and the New Zealand. These are the ones, the other currencies other than the dollar is moving. So we should be looking pretty much to the next week as the dollar being in this 72 pip range, and the other currencies we will see what they are doing, what they're supposed to be, doing. Okay. If we look at the stock indices, again, this is important because it gives us an understanding of which way the currencies will go. As you see, the Nikkei is has pushed up pretty much last week, and it kind of stalled on Friday. Monday is a holiday. The Dow Jones is at record new high. You see, it's an all-time high, historical high. The S&P also at a historical high. The Nasdaq, not yet a historical high. The Russell, not yet a historical high. And this is the key. And what is the key? When you're looking at the stock market, the US stock market, and it is important because interest rate is low. Pretty much all around the world it's zero or close. So money needs a home that it can get a return. So the only return that is available to the market or to capital is pretty much the stock markets. The US stock market, and that is dominated by the US dollar. The Nikkei, which is dominated by the yen, and the Euro stocks and the DAX, which is dominated by the euro. So if you take the US stocks, and if you can see here looking at this chart, the DAX, which is the biggest index in the United States, is pretty much has not yet broken up to the upside. It's testing this kind of resistance. Okay? So that's the first observation. The second observation, if I go to the Nikkei, to the Nasdaq, which is, it's 100 stock, but the Nasdaq is also a couple of thousand shares. Similar to the Russell, it has not broken above that resistance point. So the two large stock indices, 1,000 and 2,000 share each, have not really broken up to the outside, to the upside. But you would see that the S&P has. We don't have a real follow through to the upside, but it just broke. And the range of last week, pretty much the high, about 40 points, 40 handles for the whole of last week. And then if you look at the Dow Jones, this is the one that actually pushed quite higher. And the translation of this, yeah, the next meeting, yes, thank you. The next meeting is in 3 weeks, but I still, I don't know if he's going to cut it by next week or not. I think pretty much the person that is holding the strings, if you will, of the UK market peace of mind, and he's doing a very good job at it, is Carney. He is solid, soft-spoken, in control. He doesn't do anything in haste. So he is quite an intelligent, good man, and he's holding, keeping the status quo, and he's giving people the psychological time to swallow what happened and to accept it. So my 5 cents worth is he's not going to cut in 3 weeks. He's going to start cutting as soon as the Article 50 is triggered, or if there is some action on the political side. But until then, I think he's going to hold. I mean, he's going to get his guidance from the Article 50, because right now, without the Article 50, he has no reason to do anything. Unless a couple of banks decide to leave the UK preemptively, something like that. But until we get something of that nature, I think he's going to be, he's going to hold on. So coming back to the Dow and the S&P, as you can see here, when it broke the 18,000, it pushed higher. The S&P, it broke the 21,000, it did the 46. The Nasdaq really is actually coming down. The Russell, same story, is weakening. So what this says to me is they're only buying the Dow, which we call the bellwether, which is your Johnson & Johnson, your McDonald's, your the biggest 30 companies in the United States. And then they're coming in to some of the S&P, but the real market, which is the Russell and the Nasdaq, they're not buying, which makes me slightly suspicious about this. And of course, this might mean that not this week or next week, maybe if this begins to sell off, then the dollar will come down. The same with the Nikkei. The Nikkei goes in the opposite direction of the yen. So the yen was down last week. The Nikkei was up last week. Everybody's talking that Japan is going to start doing further quantitative easing and all that kind of stuff. Again, logically speaking, it does make sense, but timing-wise, I think every central bankers, I think the modern government now is central bankers, I think they're all waiting for the Brit exit because they need to keep their powder dry on whatever action they are going to do. And with that said, I think the yen is, or the BOJ is not going to do anything, at least for the next few weeks. And the same thing with Draghi. So if Draghi is not doing anything, Kuroda in Japan is not going to do anything, Carney is not going to do anything, and of course Janet Yellen is not going to do anything. So nobody's going to do a preemptive unless he has a reason and cause to do so. So that is my analysis of the situation. With that said, if you look at the rest of the commodities, you can see that silver is moving sideways, gold is pulling back. This gold still should be going up, and once I see gold coming up, then this will be removed, but really nothing in the metals. Platinum looks okay, but no indication of something is happening. With regard to energy, you can see that crude oil is going up. And when crude oil goes up, the dollar goes into the opposite direction. So crude going up, that's the indication. The crude going up, the indices looks, the Dow Jones and stuff looks like they're wanting to come down. So I can see that the dollar might be slightly negative. Okay? And so the way we're going to set the plan for next week is as follows. First of all, we are, as soon as the chart comes up, okay, so looking at, this is how I think we should play it next week. I see, as you can see here from the chart, this is, it's pretty much for the last 2 weeks, as I said, from 96 to 96.72, going nowhere in a hurry. So we would be, as we did last week, neutral to positive for the dollar. We're going to be actually positive for the euro, and I'm going to show you why. The euro has broken the 111.41 structure point. When it broke it the other time, it sold off to the 109.40. For the last 2 weeks, it is sitting below the 11.42. Eventually, it's going to break. Eventually, it's going to come down. But until then, I don't see any event that is going to push this further down. So we're going to be neutral to positive. If they're not selling it, then they're going to buy it. So we're going to look at slightly maybe buying, taking some opportunity in buying some of the euro pairs. If you look at the yen, this is the correction we had. We're sitting below the structure point, which is the 95.13, and this would be an excellent entry point to buy on the long side. As we have been discussing the last week, we have a big basing bottom, which is pretty much, if you talking head and shoulder, there is your one head, that's one shoulder, this is the low, and this is the right shoulder, and which is the same time the structure point, and we followed it through. So we do have the head and shoulder, but we have it with confirmation. So as a trending uptrend market, the market has a tendency to attempt making one more push higher. And that's why I think the yen should be going higher, and I'm inclined to be a buyer of the yen pairs. When I say buyer of the yen pairs, I mean selling the dollar yen, selling the pound yen. So that I'll be positive on the yen. We're short on the pound. As you can see here, this is the 132.62. This is one of the major structure points, which goes back for ages, which is since 2009. And we broke below it, and we could not, for the last 2 weeks, close above the 132.62. So we want to be short the pound across the board, and our stop is going to be the 32.62. So we're definitely short the pound. The New Zealand, as you can see, it is also like the yen, it is pushing higher. We had a correction. So if it gets above the 71.46, we will buy some New Zealand. The Aussie, pretty much the same. Okay. So again, we have a close entry, which is pretty much right there. So 7 pips away, we can buy. So I'm looking to be a buyer of the New Zealand, looking to be a buyer of the Aussie, looking to be a buyer of the yen index, of course, and looking to be a buyer, maybe buying some support in the euro. I mean, any push to the downside, we're looking to buy it. The Swiss franc is interesting. Uh, Pretty much we were expecting capital to go in Switzerland, and we were expecting the Swiss to go up in value. The Bank of Switzerland, the SNB, has intervened a couple of times, and that's why the index, the Swiss, has really gone nowhere. So we will buy it above the 102.75, or we will sell it below the 101.81. And so you can see the Swiss National Bank. This is the Euro Swiss, and the Swiss has, when this is happening, this means that the Swiss has been going up and the euro has been coming down. So again, they're pushing. Maybe now the Swiss National Bank is going to intervene, and once they intervene, this should actually turn around. So we can buy the Euro Swiss above the 108.42. So it's actually, I mean, we have a close entry. I mean, if they sneeze in the Swiss National Bank, there will be a lot of short covering coming in. So to summarize, like what we do, we're going to be, first of all, positive on the yen. We're going to be negative on the pound. We're going to be positive on the Aussie, positive on the New Zealand, negative on the CAD, neutral in a way on the euro, and neutral to negative on the US dollar. Okay, so that is the general plan. I will show you a couple of entries that I have done on the radar, so at least you can get an idea of what I'm talking about. So for example, I had a couple in mind. Let's take the yen pairs. I'll show you a couple of the yen pairs. So let's look at the Aussie yen. 80.66 to buy, 79.20 to sell. As you can see, this is the Aussie yen. We are sitting right at the structure point, which is the Aussie yen. As you can see on Friday, again, it's the same discussion. We bought from here, it went above. So technically we're short. We are already supposedly short. But if it gets below the 79.20, this is the general direction that the Aussie yen is to the downside, downtrend, so the move is going to be further down. So we have a good short entry below the 79. If it gets above the 80.66, then we're going to buy. The same thing with the pound yen, as you can see. If it gets below the low of the day, the 137.78, we're going to sell it. If it gets above the 140.01, we're going to short it. And the euro, the same story. The euro yen, as you can see, this is the structure, a minor structure point. If it gets below the 115.49, we're going to short it. We will only buy it above the 119 spot 10. The one thing I want you to see, which is interesting, if you look at the euro pound, as we all know, this is an uptrend. This is the same chart pattern formation that we had in the pound yen. So we have an easy buy above the 83.96, and we have an easy sell below the 82.84. So these are all good setups. If you look at the Euro New Zealand, we are already turning up because the New Zealand was weak. So again, we might have some short covering in the New Zealand until Tuesday. So that might be a good, and the same thing with the Euro Oz. We had a big slide down. If it gets above the 145.91, we are going to buy. And that's why I was suggesting to you that there is potential buying coming in the euros, because the 145.91 is, as you may recall, a very major structural point which goes back is it? I had it. Anyway, it's a very important structure point that we have been using for ages. I'm trying to find it. I don't know. Anyway, so it's a very important point. So if we get above it, then it's definitely a buy. And this is how the essence of the plan. This is the summary of the entries and exit. The only thing left for me to say is I hope I'm going to send you the stuff, the radar screen in 2 minutes. I hope you spend the time before dinner in trying to put these orders in. And I hope you report back next week and tell me how successful you were. Okay? With that said, anybody has any questions? Anybody has any questions? All good. Okay. It's time for me to go to bed. I stayed up working, doing that stuff till 5 o'clock in the morning last night. So all the best, guys, and good luck. Bye.